Welcome to the Scale Up Valley podcast, where we bring the best founders and investors to help you scale a business from 1 million to 1 trillion. Today's guest is Daniel, is the CEO at Fullview. Daniel, welcome to the show.
Yeah, thanks so much for having me, Mike. I'm really excited for the conversation.
And it's always a great responsibility to bring a podcast host peer. So you also have your own podcast.
I've dabbled for sure in the past. I've dabbled in it. I love the format, and I am an avid listener of podcasts too. So I'll do my best to bring some interesting insights.
And you have an amazing experience in terms of such in a short period of time you were able to live in different countries, namely in the US, in California, also in Berlin. You are based and from Copenhagen. So you also have the experiences as VC, as operator, also as angel investor, and you have now your own startup, Fullview. Yep. So give us a little bit an overview about your story and who is Daniel, and then we will go to Fullview.
Yeah, more than happy to. So I have a pretty mixed international background. My family's from Iran originally, so they were immigrants to Europe. Germany originally, and then they landed in Copenhagen. And then, I spent most of my life here, but also lived in China when I was really young, and lived in the US and California, even in Germany. So I've bounced around different countries, but very much settled in Copenhagen right now, and definitely for the long term. Professionally, basically, I started working in finance. I studied finance too, and I worked in VC as kind of like my first job, really. And then, I was working for a fund called Futuristic, which was awesome experience to work there. And they're basically investors in pre-seed and seed stage companies more across Europe. And then that's kind of where I got my first experience with working in VC. And then, I always knew I wanted to start my own company. And B2B SaaS was definitely different verticals of B2B SaaS were always quite interesting and fascinating to me. So, I landed at a company called 23, where I was basically working kind of like a cross-functional go-to-market role, also owning a lot of customer relationships. And then that's kind of actually where the idea for Fullview was born, because then I saw how big of a pain it is to understand user issues. I was part of launching new products, so I saw it from a product angle, and then also the customer relationships I was owning, I saw it from an angle of trying to help out customers both in real time and async. And that's kind of where the idea for Fullview was born.
And now we are curious to know more about Fullview. What is the problem that Fullview is solving, and where are you in terms of stage of growth?
So Fullview, what we do in a nutshell, we basically help SaaS teams understand and fix user issues much faster. And we help you basically, especially with the customer support teams we work with, and we help them skip all the back and forth with their customers, all this annoying, time-consuming things to gather context when customers reach out to you. So the way we do that, we essentially let SaaS teams and support teams and also product teams visually see what is happening on the customer's UI. And also in the console logs of your customer. And then we couple that together with co-browsing too, so you can basically troubleshoot with customers. So we're kind of this 3-in-1 tool to see and understand and fix user issues for SaaS companies.
Kind of having this value proposition of delivering 10x better customer support experiences at scale.
Exactly.
I really enjoyed the way you described it. And you have raised the largest ever seed round in the history of Denmark with $7.5 million, a $7.5 million round. And then in terms of where are you in terms of head count, anything else that you can disclose?
Yeah, definitely. And we're lucky in terms of attracting a lot of good investors. I don't know if someone has raised an even bigger seed round since, maybe, but nonetheless, we're lucky to work with Lightspeed. Most people would consider them a tier 1 investor, and then also some amazing angels like the founders of Unity, Leo, Dixa, execs from Coinbase, etc. And where we're at, basically, we're still very early stage as a business, but we move pretty fast in building an interesting product that solves like a very real problem in the market. So yeah, in terms of our team, we're a pretty lean team of 13 or 14 people today, probably working at the scale of 2 or 3 times the size that at least.
Got it.
But yeah.
And that's definitely a good point also, and I see that that's a new trend that we are seeing more and more, and I'm always repeating this on the show ultimately, which is being more effective with a smaller ad count. Is definitely one trend that we are seeing, instead of just hiring and then needing to do layoffs to extend run away, right?
And it's especially relevant right now. I mean, a lot of SaaS companies overhired, and we all have seen the news and the headlines lately, but lean capital efficient growth. That's the way to do it.
It's always a temptation, right? So there is so many things to do in an early stage startup that it's always good to have someone in each of the functions supporting us, but sometimes we need to have more generalists and still to play different instruments and then start to specialize a little bit later. And the difficult part is where we need to specialize first, right? So in terms of the structure of the team, any tips that you would be able to share about how you are structuring the team at this seed stage for the company? I think it's also important to mention that you started in May of 21, so it was quite fast to raise your seed round. You also raised an angel round before, right? If I'm not wrong.
So we started working full time on the business summer of 21, and then raised the first round of funding like Q4 of 21. So a couple months after that, yeah. And then seed round was pretty much right after, like 3 months after the pre-seed.
22.
About 1 year. Yeah, exactly. Q1 22.
Okay, so now it's been 1 year since you raised that seed round, but still the first 18 months of the business, right? More or less. And in terms of, we were just discussing in terms of the structure of the team, I think this is great advice for the ones who are through their pre-seed and seed stages, how to organize the team and how to resist the temptation of hiring too much too early. And then it comes the question, okay, we have this constraint, let's try to be super disciplined with our burn rate. Where should I hire in order to not compromise growth with this decision as well, right? So this paradox is difficult, right? We can't compromise growth, but at the same time, we don't want to over hire. So that's a difficult balance.
It really is a hard balance, and most companies will kind of have a few iterations before they get the initial team right. And definitely, like, we're pretty heavy on engineers. That was the first thing for us, was only engineers. And I think that's probably the same for a lot of companies, but it depends on what your product is at the end of the day. There's some companies where the challenge is less on the technical side. It's maybe more on like maybe you're building a marketplace business where you have this, chicken and egg problem, and that's kind of your biggest challenge on the go-to-market side. For us, the biggest challenge from day one was always the technology, because it's not an easy thing to build, and also building like a 3-in-1 kind of tool from the get-go. That was the original idea, still the vision today. And then we work with a lot of big data in processing all of these user issues that Fullview is able to display for our users. So definitely really like a technically heavy team that we have. So
in terms of founding team, 2 co-founders, one more from a business background, you and another technical co-founder, or any other split?
Yeah, basically. So that's really important. Like the technical, we're only two founders. That's definitely also a challenge in some way. I think a lot of teams, of course, we're not the first to only have 2, but like I would never do this alone. First of all, I would never do it as a solo founder. And I think 3 is like the maximum, but 3 is probably the sweet spot as well, if I'm totally honest. But me and Doran is my co-founder and CPO in the business, have a really strong dynamic together where we always seem to be like in sync, and both of us are really like committed to the product. So I'm definitely more like a commercial profile myself, and my co-founder Doran, he's more like a product guy, and that I think is quite important to have that balance.
And would you recommend, I think that this is also another question, to have more a CTO profile or a CPO profile? And of course, the dream would be to have a kind of a CPTO profile
That's the dream. If you can find a person like that, if they exist, I haven't seen too many of them. Yeah, definitely. That would definitely be awesome. But yeah, I think that's probably the ideal setup. But there's no right or wrong way to do it. There's
Right.
lots of successful companies that have done it in different ways. But nonetheless, like you need at least one co-founder who is just 100% focused on the product, because I don't think that's a role you can really hire for in the early days. And especially when it comes to like the user experience, like the things basically that will get you to product market fit. Like how do you actually, and this should be both founder or all founders
Right.
in the business who should be just focused on product market fit in the beginning. So if you have one guy or girl who's really focused on just being able to build beautiful user experiences, understand every little nuance of how a user would interact with your product, that's super, super important, because I don't think that pre-Series A or pre-product market fit, you can go out and just hire like a product manager to do that for you.
Right. And that's a good point that you also mentioned that, and we are seeing more and more. Of course, the classic is the two founders, one technical co-founder or product co-founder, and another more from a business or even if it's possible, a revenue go-to-market background. But if you would have three, I'm seeing a kind of a trend also to have kind of product, technology, and again, business, or sometimes even a COO. So then there are different mixes for a founding team when we have a three leg founding team.
Mm-hmm.
When you were saying that maybe three would be even better if you would have started again. Of course, it is also about the people that you know and the right timing, and we know that a lot of companies fail because conflicts between founders. So it is better to go with two that you really know each other and that you trust each other than trying to add just a third just because you feel that you will be better.
Yeah.
But in terms of the relationship, maybe the risk will increase because you don't know that person very well, etc. etc.
And especially if you have more, I think three is the max. Like three is a good, if you can have like, commercial profile to be CEO, a CTO, and then perhaps like you mentioned, a COO type, but who's probably in the early days also more like sales focused. That's good. Or ideally two. I would say probably the best is to have like one product, one CTO, and one commercial profile. You probably don't need more than one commercial profile, but more than three seems like an overkill. I don't really, to be honest.
Exactly.
I mean, there's probably many successful companies out there with more than three co-founders, but I don't really get it, to be honest with you, how you can manage that. And
it's incredible how we see always different splits, and we get challenged in this idea of having the technical and the commercial or go-to-market, as you said. But anyway, let's get back to Fullview and to the category that you are serving. I think this is a very important area. One of our guests in the past in the show has been Nick Mehta, the CEO of Gainsight, also in the CS space. So we know that at this stage retention is super important in a downturn or a potential recessive environment that fortunately it's not being confirmed in the previous quarter and in this quarter. So hopefully we will not get into recession here in Europe. But things in the US are quite different, and we have been seeing layoffs for the last quarters, and we are seeing some beginning of it in Europe. But I think it's still just a few first companies that are announcing it. How do you see your category and the relationship with the market dynamics that we see today?
Definitely a good question. And I would say that even like just on the point about a recession, if we're in a recession or not, it doesn't really matter what the people like, the technical definition of the recession, because most customers, most customers think that we are in a recession. That's all that really matters.
The perception.
As a business operator, the perception matters more, right? At the end of the day. And probably in the SaaS world, we are in a recession in our industry. So what does that mean for Fullview? It means basically like we are in some ways very lucky that we are in the customer support and CS space, because obviously this is like a focus area for people that want to retain their customers. And that's probably where most people are starting to focus for the next coming 12, 18 months, however long this dynamic market economics lasts. But basically, people have gone from switching from a view of just like top of funnel growth to more like net revenue retention focused.
Right.
So being focused on retaining and expanding existing customers. And if you look at like what is NRR actually, like what is the formula for net revenue retention, a key element of that is your churn. So
Right.
our customer, and obviously you need to keep your customers happy. You shouldn't let them wait for ages when they write up to you on a support chat or open tickets in Zendesk. And just being able to like increase your customer satisfaction by faster and more efficient customer support is an incredibly powerful thing that you can do right now to stand out from the crowd.
Exactly. So kind of preventing churn from happening, and also if churn is happening, it shows that maybe there is no problem solution fit, there is no product market fit. Customers are not happy with the product. If they are not happy with the product, they will not buy more product, let's say. And in that sense, they will not expand as well. So something is not working.
Exactly. I mean, how many times have you written yourself, like Mike, how many times have you written to a support for something? You've been a customer of many different things in your personal or professional life. How many times have you written to support and it's just been such a like painful experience? And then,
yes,
just been like, screw this, right? we've all had an experience with crappy customer support, and we know how it feels like pulling teeth, right?
Absolutely, that's a great point. We have all lived.
And eventually, you're just gonna say, you know what? There's a million other options out there. And anyways, my boss told me that we need to cut our budget. Screw this vendor. Let's find another one. Right.
Exactly. So you're talking about the importance of even having a technical or product co-founder and a commercial co-founder. That it is the job of both founders in the beginning of the company to be close to the customer and to focus on developing the best product for the customer and to solve the pain points of the customer. So I know that we don't discuss more, and I like this, and that's why I've invited you to discuss more. How do we go from 0 to 1 and from almost pre-seed to A, and you might be already getting close to the A round. Why it's so important to be close to customers and to be focused on the product, right? Simultaneously.
Yeah, definitely. I mean, in the early days, the product is everything. And I've also realized that the way that you lead the strategy of your business is through the product. Like you drive strategy through product. And that's why like you cannot outsource or delegate things that relate to developing your product in the early days. Of course, you need engineers. You can't, like, even if you're the greatest programmer in the world, you can't build a complex product on your own, or even any like reliable product on your own. So you need, of course, developers, engineers to help you out. But in terms of like what the customer is actually experiencing, like the customer experience, user experience with your product, that should live and come from the founders, ideally both or all founders of the business. So that's something we've really prioritized, myself and Dor.
Right. And I see that you are saying that the product in your case is a bit complex, and usually this is appreciated because it seems there is an IP, there is some R&D, there is some proprietary intellectual property, repeating again the word, that also makes you quite unique, and it's your secret sauce, right?
I would say our product is complex behind the scenes, but for the actual use, that's the magic that we've been trying to build. For the actual user, it feels very intuitive. It feels like pretty simple and easy to use it as it should be. But behind the scenes, there's a huge amount of data that we're processing. Already millions of user event data points that happen every month that we are processing via Fullview. So that's of course a lot of complexity that we need to be able to handle.
Right. I know this is a very open question, so I will let you go in any direction that you'd like. But again, focusing on this 0 to 1 or from 0 to post-seed stage, pre-series A, what would you like to highlight from lessons learned during this 18 months, let's say almost 24 in May of 23, right?
Oh, that is a tough question, but I would say one of the most important lessons we've learned is again about like just focus 100% on the product, and that's the highest leverage thing that you can do as an entrepreneur, that to just focus on, like, especially as a software entrepreneur, as a tech founder, like focus on your product and then figure out like the go-to-market side of it as you build the product, but don't put the cart before the horse. And like, oh, what is it saying? Yeah, did I say that right? Put the cart before the horse, or the other way around?
But I got what you meant anyway.
You know,
so I'm very intuitive, so I don't need to kind of go to the specific word. I was following your thought process. Yeah.
But yeah, make sure that you do, step by step, and like, of course, like you mentioned at the beginning of this conversation, like grow at a reasonable pace. Don't grow too fast. Like there's probably so many companies that started in, our cohort definitely did that. Of course, we're not completely innocent of those mistakes, but I think we've been able to course correct really fast, and that's probably one of the greatest lessons that we've learned, to be able to like don't cry over spilled milk, if that makes sense. Just course correct and then do what you got to do.
Right. And I think this is always one of the main reflections that any founder is, right? So that's this mix of product and go-to-market. So if you have an amazing product, but if the customers don't want that product, it will not work. If you have the customer super interested, but the product sucks, it will not work. So you need really to have the product quite close to the customer, but also if you ask to the customers what they want, probably you will also develop the wrong product. So it's always complex to figure this out.
Exactly.
You also of the process.
Exactly. You can't just like bury yourself in like a dark room and then like just code all day and then come out and say to the world, here's the product, please use it, because then you might build the wrong thing, right? That's a huge risk, to build the wrong thing. But that's why you kind of need this in parallel to like, build, give to the customers, go back and build, and then have this like iterated approach to building your product, and then building the business at the same time as the product.
Right. It makes me think of, I don't remember the sentence from Y Combinator, right? So build what users want, but it makes me add, but don't build what users tell you that they want. So
also true. Yeah, that's so true. Like there's so many conversations where people say, I want this feature, and then like you dig a little bit deeper and you realize that, okay, that's not really what they want. Or like the problem, like it's your job to understand, right? It's your job to understand the problem and then come up with a solution. But it's not your job to just build the solution. Otherwise, you would just be like, just start a consulting business, software development consulting business. If you're just going to take orders from exactly what customers tell you to build, because you're also going to end up building something that maybe only one customer wants, but the market at large doesn't want. So that's obviously a big risk.
And why there is a lot of a source of frustration in the consulting industry, because sometimes that this is not what the customer wants, and you still need to develop and get to the conclusion that we might need to change the project.
Yeah, actually, my co-founder Doran, he comes from that world. He had a product studio in the past where he built like custom software for clients, and then so I think he has some scars from that he's learned some lessons the hard way.
Yeah, in a certain way, in my work that is not so much pure consulting, much more advisory and coaching. Sometimes I even see it myself. I've seen the movie before. This will not end well. Fortunately, today I have the luxury to say, look, I'm not in this direction. I respect your decision because that's your company, but I'm out because I can't commit to help you go in the direction of something that I know. In general, in your case, it might be different. I'm not the owner of the truth, right? But I can't commit to go in that direction because I will not feel well with my mind.
Exactly.
Good point. Cool. And let's go into the fundraising. You have mentioned before that you were able to attract amazing founders from Unity, Playo, Coinbase, Instana. From Playo, very well known in Denmark and globally, Yep Rindom, the founder and CEO. But I think this is kind of the dream of any founder that is starting a company, to be able to attract tier one founders who can support them and also who are related to the category that they are building, because it will create credibility, and also a tier one VC like you did with Lightspeed Ventures as well. So any lessons learned, and again, we know the numbers that you have raised as well.
Sure. Yeah, definitely. Like I always wanted to build kind of like I wanted to build kind of like a tribe around us of like trusted advisors that would, but also be investors. So they had like, they put some skin in the game too. So it's not just advisors, but then, and especially in like different categories that I knew that we could use a lot of help with, or just we've done something comparable to what we're trying to do. So relevant people as well. And definitely like the guys from Instana have been super, super helpful for us. Like Fabian Lange, he's one of the co-founders of Instana. And Instana is like a monitoring observability platform. So they had built like on a similar, it's not relevant to like our product directly, but they built a similar tech stack from what we had, from what we ended up now using. So like, he was able to get into the grains and the really minute details. He's part of our Slack and like he talks directly to our team. So like having an angel investor who's also like a close advisor like that, that's like a game changer for sure. And then there's definitely other people like Gloria Bauerlein. She was CEO at a company called Bakh. She was part of Index Ventures before that. She's been awesome and helping us with like operations, figuring out like data privacy, GDPR, security, things like this as well. So having these people who've been through this journey before, that means a lot.
And sometimes we tell founders that you need to go through a structured process, if possible, convince first the founders and then go to the VCs. Start with the VC that is not in your dream list, especially the VC that you don't want, to start training your pitch and improving your pitch. But then we know that the process is so overwhelming, it's so emotionally intense, it creates so much anxiety, and it's so difficult to coordinate meetings to all happen at the same timing that this is almost impossible to happen. So in theory, it sounds amazing, but in practice, it is another story. What has been your experience, and what would you suggest to other founders that are now in fundraising? Should they go first for the angels and then for the VCs? Should they do it simultaneously? Any tips that have worked for you? It's all about your experience, and we know that every single experience.
I would still like talk to the angels first. They're like in some way less biased. Of course, they're less biased in the sense that like they're kind of like, they don't necessarily have like ownership percentages that they're trying to reach, and they're not like, they can kind of be like a more like unbiased sparring partner too in many ways, especially if they're former entrepreneurs too. So I would definitely start there. But that's definitely what we did, and I would still recommend that today in today's market. And then you could use them as kind of like get them to commit, and then they can help you build up around. They can help you get warm introductions in front of the right institutional investors to then lead around and then top it off with those same angels. So I would do it that way.
Right. And in your case, we know that we have founders that might be in fundraising for 6, 7, 8, and in some cases even 9 months, and those are the really resistant ones. But there are others that are able to almost, because maybe they started the networking and the relationships before, to almost close it in 1-2 months or 3 maximum. So what has been your experience, especially in the early stage funding round?
In terms of, you mean like how fast you can close it?
Yes, since you started until you close it, the process.
For us, we were lucky that we were able to do it within like 2 to 3 weeks.
Amazing.
But that's probably not a good data point, and this is also a different. And to be fair, like this is also a different market climate than today. So I'm not sure how much that would apply in today's market. I think today is definitely, you're talking more in months and not weeks. Yeah,
makes sense. Any other thoughts that comes to your mind in terms of the fundraising process that you followed, given the results that you have achieved?
Yeah, I mean, I think it definitely makes sense to find like an investor who's like aligned with your way that you want to build a company, but that's also like a position of privilege to be able to like pick your investors. Sometimes you just need to fund, like at the end of the day, you need to just fund your business and then move on with your day and then get back to building. That's like at the end of the day what it's about, right? But if you have the options, definitely you try to pick someone who is like, you can spend a little bit more time with them if you're able to do so, to like, suss out anything that might not be aligned with your values or the way you want to build your company. And obviously you can do like a lot of references on them as well, but like pick your own references. Maybe don't necessarily listen to the ref. Like every VC will tell you, hey, like go talk to this founder. Of course, they'll tell you to go talk to the most successful founder in their portfolio who's had the best experience working with them. Go find the ones who didn't work out maybe, and then see what they have to say, and then you'll probably hear like a more holistic picture.
That's definitely a good one. And before going into a topic that I'm super curious to approach, which is also your angel activity, I would just conclude about. I understood that in terms of your ICP, we are talking about SaaS businesses. That's why you said even if the world is not officially in a recession, we are seeing what is happening in SaaS. So the perception, at least, is that there is a recession.
Yeah.
So people are more afraid to make investment or procurement decisions. So in that sense, what is your ICP in terms of geographical expansion? Where are you landing? Any particular SaaS stage of growth for the SaaS companies that you target?
So we don't have like a geographical restriction because it's pretty straightforward SaaS. What we do, the only restriction on geography is time zones for meetings. But of course, we focus on B2B SaaS companies in the mid-market range. So we define that as anywhere from 100 to 1,000 employees, plus minus, give or take. That's kind of our sweet spot. We have some that are slightly bigger than that, but yeah, definitely that's kind of like the mid-market that I would define. And probably they'll change in the future if we might go up market like most other SaaS companies eventually do, but that's the sweet spot for us right now. And that's like when your customer support team starts to, you start to feel a lot of its pains and like trying to do more with a lower headcount, especially these days.
Yeah. So in other words, are you saying that in your perspective, given that it's a very specific category and a very specific target, it doesn't make too much sense, and those are by definition international and global companies? Yes. Maybe to go geography by geography to focus on specific countries, and the majority of those also speak English. So even if they are not based in English speaking countries, let's say.
Yeah, we never took any geographical like approach. Like I think it's a great idea if like you're, for example, a fintech company. I know a lot of them do that for also, there's different regulations in different countries. That's like there are pros and cons in some way, because like on one way, if you can, for example, like Clio, I know like they started just in Denmark, right? Because like also regulations and etc. Yeah. So that's nice. You can kind of focus on your home turf, especially if you're a European company. Focus on your home turf, where you can sell to your own network and all that, and then go market by market in a really focused way. On our side, it's like it doesn't make sense, especially to focus in Denmark. It's almost a non-existent market for us. There's like, of course, there's great B2B SaaS companies here, but none are very limited in like the commercially relevant ones for us. And then so we just kind of went global from day one. So we have customers in US, Europe, Australia.
Got it. Okay, kind of the Europe East Coast, and then of course the Australia, New Zealand, and and also the West Coast. It's still a 8 hour to 9 hour from Denmark, but
yeah, exactly. But so far we managed quite well to like also like deliver our own customer support. And I mean, to be honest with you, most founders, like ourselves, who work like long hours anyway, so it doesn't make that much of a difference if something comes in at 10 p.m. But of course, in the future, we would probably have international sales and support reps.
Makes a lot of sense. And now, before going to the last segment of the show, just a quick thought about your activity as Angel. Typically, we had angels in the past year on the show. They start investing typically post Series A, Series B, Series C, or even after exiting the companies, but we are seeing more and more operators starting much earlier to invest, which shows also the democratization of the angel market. And I think it's also great for founders to have a larger pool of angels to support them. So I think that's an amazing trend. And I think it would be inspiring for others that are now operators at early stage companies that could also become angels, and maybe they are not thinking about that option. They think it's too early for me to become an angel, and maybe it isn't. And you can share your experience on that.
Yeah, sure. So yeah, I did my first angel investment maybe 5 years ago, something like that, 4.5 years ago, I guess. And basically, like, so I was already kind of like into it. Like, I was working at a VC fund back then, so I kind of had like the exposure to like companies. So I was lucky in that sense. But then I didn't have millions of dollars in my bank account that I could risk. And then eventually, I just decided, hey man, this is like, you're missing out on a lot of interesting action here. And then by the time I was working in operations, I would just like, I had like friends who were just starting businesses, and I just figured, why not just like write really small checks, whatever. Like at the time, it was like 5K was like the maximum that I could write back then. And then actually, I put like almost all my savings into different angel investments back then. And then some of them failed, and obviously, but some of them, one or two of them, had paid off like really well. I'm happy I did that, and I would definitely recommend more people to do that, because most importantly probably is that I built a really strong network around that. And then I was able to use that to like, find people that can help me with my own company. And then, whether that was investors that I met through having invested small checks in other companies. I met plenty of Fullview's current investors through that, actually. And then also customers. We have like angel investments I made, and then build a relationship with the founders, who then actually ended up being like customers of Fullview, ironically.
Wow.
And then vice versa, I became customers of them, and kind of build like an ecosystem around, or like a network around myself that way.
Yeah. And when I'm asking this, it's also important, and you have it publicly on your LinkedIn. So for people, if they want to visit your LinkedIn, it's Daniel Bakh, just search CEO and founder of Fullview. You have personally backed more than 40 startups to date, directly or with angel syndicates. So what you are saying is really, and would you suggest for the ones who are thinking about it, but maybe they are thinking, I need to have maybe an emergency fund, and then there is a discussion, should the emergency fund, sorry about the pronunciation, be lasting for 4 months or 6 months or 12 months? It will depend from a profile to another. It seems that, and maybe it also depends on where you are in your life, if you already have a family, kids, other responsibilities or not. I think that if you start very early, you can risk much more in that sense. So maybe
exactly
you can be much scrappier, and you can invest almost the majority of your savings, and not have even a substantive emergency fund, right?
Yeah, exactly. That's of course, it's like it is in some way like a position of privilege to be able to put like all your savings into like a highly illiquid and high risk asset.
Right.
But if you're young and you can like, you don't have like kids and a family that rely on you yet, then why not? Like, why wouldn't you do that, right? You might as well take some risk, and hopefully one of them will pay off a lot. If not, it's like, basically think of it as paying for an MBA, right? It's probably way more. It's probably way more valuable than an actual MBA. Like, so instead of going to pay for some expensive like graduate degree, why not make some angel investment, and then you'll probably learn way more, especially if you have like an entrepreneurial appetite.
Absolutely. The amount you learn, and you also start training a very important skill that will also help you as a business founder and operator, which is investment, right? At a certain point, you will be able, fortunately, to accumulate a certain amount of money, and you would need to know how to invest that amount of money. And now you have another asset class that you start understanding. And as you said, the good news is that the majority of the ones who are thinking about investing in VC don't have exposure to VC, don't understand the SaaS world, don't have the network, and you understand it. So I even feel it myself, that if I would have invested much more time, those small checks because I knew much more about the founders, I would be in a much better position than selling services, right?
Exactly.
So that's definitely, I love the MBA because normally we talk about start a company instead of doing a MBA, which is a great advice in my opinion, because it will become your MBA. But also investing might be even a less risky activity than starting a company, and can also prepare you to, after becoming an angel, to start your own company with exposure about what you are seeing. And in that position, you will not also like to position yourself as the angel that knows everything, but you are only learning from the founder and supporting as much as you can, right?
Exactly. Like, and if you work in this, like, for example, if you work as a sales rep in a relatively successful B2B SaaS company, and then you just ask like a early stage founder, hey, can I invest 5K into your company, and I'll help you with sales. I'll just tell you everything I know about sales, and then maybe
that is great.
Like most of the time, they'll probably say yes. If you're like, of course, if you have a prior relationship, that helps, but you don't have to be like a big hotshot to get started.
Love it. That's great.
Yeah.
And let's go to the last segment of the show, where we go here kind of a ping pong of quick question and answer. So if you'd have the opportunity to have a coffee with yourself, I know it was not a long time ago, but almost 2 years ago, what advice would you offer to your younger Daniel?
I would probably say an even younger Daniel. I would say probably like take more risks actually. Like I think I always had, like we just talked about, like the making these angel investments now, and I was always had like an entrepreneurial appetite for risk, but I think there's also some areas where like I played it too safe. Like I think actually I waited too long to start my own business when I think I was ready for it and had the opportunity to do it maybe like a year prior to I actually did. So or maybe even way before that actually, like and then I maybe thought that, oh, I needed to, like, get a bit more like job experience first, and like, work in businesses, established businesses before. And I'm definitely happy I did that. It's not like I regret it, but I think I could have started just earlier and just taken more risk.
Love it. And we can see in your story that you have tried to expose yourself to a lot of different realities, different sides of the table, which is, I think it is also valuable to you. You also have much more proficiency today to do what you do, right? What are you the most proud of on your journey so far?
Oh, that's hard to say, but I would say probably like retaining like really strong like friendships outside of work. I think that was like one of the best things I did for myself, and like just being able to have like more balance, because like being a startup founder can be extremely taxing sometimes on like your kind of mental state. There's a lot of ups and downs. Like I wouldn't trade it for the world, just to be clear. But there's definitely like crazy ups and downs that you have to deal with, and that can be like sometimes it's hard not to get like emotionally attached to the ups and downs of your business. But having like a strong group of like friends outside of your work that have nothing to do with your work, I think that helps ground you a lot. And then you can just kind of turn off and feel more balanced, which will also make you more productive in your business.
That is something.
So I'm proud that I was able to do that. Yeah.
Well done. That's something related about what we have been discussing here a lot, is try to consume less content about startups when you are outside, or when you are trying to have free time, because I think that, and then I'm talking against myself, every single minute that I could find, I was reading something on Twitter or on LinkedIn or any blog post, or the last report that came out, or the new SaaS napkin from Point9 or whatever it is. Always obsessed about knowing more and more and more and more, and then you have this anxiety and feel of overwhelming and potential burnout and depression and so on. So I think it's really important to advise founders to, it is not expected to be always on, and it is not healthy at all to be always on, right?
Yeah, but to be clear, you're like, don't expect to have a regular 9-to-5 schedule.
Exactly.
That's unrealistic. But yeah, that's unrealistic. But like, don't spend every Saturday and Sunday working your ass off to like take some time off and like hang out with your friends, with your family, with your partner, or whatever.
Worst advice ever received?
Worst advice I ever received, I think I have to go back to like the kind of financial things, personal finance topic. So I remember there was a former boss who told me, was trying to give me like advice on my career, and told me like, hey, don't focus when you're in the early stages of your career. Don't focus too much on the money. Don't worry about making money. You can make a lot of money later on. And I understood where he was coming from, but I thought and I still think that's terrible advice, because if you can focus on making a lot of money when you're really young, it'll make the rest of your life a lot easier.
Yeah.
And then it'll set you up to be able to take more and more risks over time, and have a greater return on that risk, hopefully. But if you just, of course, with that said, like the caveat, like don't do something that makes a lot of money, but you're miserable doing it. Obviously, that's not worth it either. But find a balance where like actually do focus on, like, of course, do what you want to do, but focus on making as much money as you can while you're young. And then it'll make, the latter stages of your life a lot easier.
Absolutely, because that's also the period of your time where you can save and invest the most. When you start having another commitment, then it's not the best time to start. You already want to have the practice, and also the practice, right? That a lot of people we know, we are seeing a lot of startups in that field of investment democratization, investment skills, personal finance skills. It takes some time to learn, and we need, again, as in business, to make a lot of mistakes as investors to start understanding how to do it.
Yeah, exactly.
Favorite book, business or non-business? This is about getting to know you. Yeah.
So the most memorable book, and probably the best one too, it's called The Clock of the Long Now. And basically it's about it's about a real project where these people, they built like this clock that was supposed to last for like, I think it was 10,000 years or something, but it was kind of a metaphor. It's a real project that you can look it up. But the whole point of the book is about like long-term thinking and how you can become more long-term oriented yourself, and the kind of compounding impact that you can enjoy if you are able to think more long-term.
Awesome. Favorite movie or series?
Oh, I would say I love watching Netflix shows, so it's hard to say that. But I would say my favorite movie, it's a documentary called The Smartest Guys in the Room. It's about the Enron scandal. I thought that was anything that relates like these like high-profile scandals like Enron and like FTX more recently. I think that's always interesting to study how these people can be so crazy and do the things they do. Part of it is probably like the drama. I just enjoy the dramatic aspect.
Got it. And finally, your favorite podcast, excluding this one, and yours.
So yeah, excluding these two, I would say actually something. I also try to sometimes like consume non-startup podcasts. So there's one called Flagrant. It's like a comedian named Andrew Schultz. It's just it's just like basically him and his friends talking crap and just like making jokes. So I really like that. It's not really about anything, to be honest with you. So I'm not sure if I'm selling it that well, but if you want to have a good laugh and just like turn off your brain while you're at the gym or something like that, listen to Flagrant.
Right. Love it. I will try it out. Daniel, it has been a pleasure. Thanks so much for joining us today. And you are always welcome to come back to share the next chapters of your journey.
I appreciate it, Mike. Thanks so much for having me.
And to our community, thanks for being on that side. We keep bringing you the best of the best to help you scale your business. See you soon and keep scaling.